Hey everybody, Q here with another China Gold Oil weekly market update for the week ending January 25th, 2013. We're looking here at the Dow Jones Industrial Average. The gap here was Monday, the holiday, and the 4 trading days of this week we were up every day. We can pretty much see that from here. This was my initial indication that it was going to be a continuing uptrend, and sure enough it was. It is. So we continue to go up. The next thing I'm looking for is possibly an interaction with this upper envelope, which will stop the growth. Not stop the growth, but it'll bound the growth. And then if it continues to grow after it touches this upper envelope, it'll probably be bound by that. It won't go above it. And we'll be able to see that later on when we check out the China indices. So that's the DJIND. I don't see any reason for it to stop going up. It might level off at around the 1400 level. It might not. I'm just going to check out the interaction with the upper envelope and see what happens next week. Now off to the SPX. And this is the SPX, the S&P 500. More or less the same story. Continuing growth. We had that first trading day of the year indicating a strong continuing uptrend. Leveled off a little bit here and there, but that's very natural, very normal. It can't go up or down too quickly. And we continue to go up. Not exactly like the Dow Jones, but very similar. And again, I don't see any indication of it stopping its uptrend. Might interact with the upper envelope if we get a little exuberant, but it might just follow this slope that it has created. We'll see what happens. I don't see any indication of any change in the near future. Now we will look at some commodities, starting with the GLD. And looking at last week's price action in GLD, we can see that we never made it above the 50 or the 200-day moving average. They're right on top of each other here for the last week or so, and we never made it above those for gold. And we did start to go down. Thursday and Friday we had some down days. This is called a doji, and it indicates a possible change of direction, but this is very, very weak. If anything, it might come back up and touch the 50 and the 200 day and then continue its downtrend. That's kind of what I see as a high probability for next week. Or it might just level off and not be able to go up until the 50 day comes down and interacts with the price action. But right now I don't see any indication for it to go above the 50 and the 200 day. We've tried a couple of times and it just hasn't worked since pretty much beginning of December. So GLD not looking up in the near future. Let's see what silver has to say. And here's the chart of SLV for silver. We can see that we did make it up above the 50 and the 200-day moving average, but it was not enough. There was not enough momentum there. All the traders in the world decided that the price action was more natural down here, below the 50 and the 200-day. So I see a continuing downtrend from this, and this is a pretty strong down indicator, the last trading day of this week. So I'm looking for a continuing downtrend in gold and silver. Let's check out oil. And oil is continuing its recent uptrend of the past 3 months anyway, or 2 months. We have actually leveled off with the price range and are beginning to move away from this upper envelope. We're not really moving away from it, we're just kind of separating from it. We're not exactly hugging it like we were right here. So we'll see what happens with the separation. I don't see any huge indicators of up or down. It might actually go up, judging by this. It's called the Dragonfly Doji. And we started the price action pretty high. We came down throughout the day, and then throughout the rest of the day we went back up and closed just about where we opened, after being down for the day. And that is called the Dragonfly Doji, and it is a general indication of continuing up action. But this is very weak. It's not big. It's not interacting with any moving averages. So it might continue to go up, but not very strongly, and it will always be bounded by this upper envelope. So don't worry about that. I'm actually looking. I would like it if this would separate from the upper envelope and maybe interact with this 50-day moving average down the road. But that's probably a couple of weeks away because it's pretty far away, judging by the past price action. So for oil, I'm looking, not below the 22 level for sure, not above the 23, 25 level roughly at the high. So we shall see what the next week brings. Okay, last commodity we'll do here is JJG for grains, the grains ETF. All right, JJG here. And we can see, again, it's very clear this downtrend that we've been in for the past 3 months. Didn't make it above the 50-day moving average, played around with a lower envelope, tested the 50-day moving average again, broke below the 200, really hugged this lower envelope that I use. And that's what I mean when I say, that lower envelope and the upper envelope bounds the price action. And that's what determines to me what is overbought and oversold. This day right here, oversold. This day right here, oversold. Has to come above that envelope. So we see here, back here, this was a Friday, and I said it's an indication that it would probably go up and interact with the 50. It went up a lot quicker than I expected, but it did almost interact with the 50. Didn't make it above it at all, and then starting this week on Tuesday, started dropping down a little bit. Wednesday, Thursday dropped down, and then on Friday came up a little bit off of Thursday's prices, but again, it's below that 50-day moving average. I don't see it going above the 50-day or the 200-day moving average in the near future. So I see it actually, it'll probably, or my guess is that it's going to interact with this 55 level, with the 50-day moving average, maybe with the 200-day moving average, and then the price action is going to continue down. But that interaction with these moving averages and the price action will indicate the probable future. But next week will tell us that. But I see it in general staying below this 55 level, below the 200 and the 50-day moving average, possibly dropping significantly below that, but we shall see. All right, now we will hop over to the China indices. And here we are looking at the FXI, the China index. Okay, let's see. Here was the uptrend. We interacted with the 50, bounced off it. We were bound by the upper envelope. Way overbought up here, had to come down and be natural again, which it did. Continued to hug the upper envelope, and just recently, this past week, China has come off of the upper envelope. Kind of significantly, because it hasn't just leveled off, it has actually dropped, especially on Friday. We saw it drop there. And this bar, this candlestick, indicates to me that there's a high probability that it will continue down and interact with the 40 price range and possibly with the 50-day moving average. That would be really healthy for stronger growth if it did interact with the 50-day moving average, depending on what the price action tells us, what the interaction actually tells us when and if it happens. But that's kind of what I'm looking at for China within the next week, is for it to come down and probably interact with the 40 price range and the 50-day moving average. That's what I'm looking for next week. Now off to the EWH. And here we are at the EWH, which is the Hong Kong iShares ETF. And we can see very similar price action to the general China shares. Continuing up through 2013, through January, we've been going up slightly. Not really hugging the upper envelope, but we're definitely continuing the slope, following that slope that it has defined of the upper envelope. I don't see any indication of it coming down. This last price action is an extremely weak Dragonfly Doji. Again, opening up, dropping throughout the day, going up before close and closing right about where we opened. That's a Dragonfly Doji, but this is a very weak one. But it is not an indication of probable down, so I don't see this dropping down anything really significantly in the near future. We'll see what the week holds. Now let's check out the China Consumer, CHIQ. All right, here we have the CHIQ representing the China Consumer. And boy, last week the China Consumer didn't drop off a cliff, but it sure did pull back some. So here's what I'm looking for. We're probably next week going to continue down and interact. The price action will interact with this 50-day moving average. Again, this is my guess based on what I'm seeing. So it'll probably interact with this 50-day moving average, and then we'll see what the price action tells us. But there's a strong probability that it might continue up based on this price action and based on this price action. Back here we didn't even reach the 50, and then we hugged the upper envelope quite a bit. separated from it, started dropping off. Now I see it interacting with the 50 probably next week. And there's a good chance that it'll pop up off of it, but we shall see what the price action tells us when it does interact. Wait for the price action. Let the price action tell you what to do. Alright, so that is the China Gold Oil weekly market update for the week ending January 25th, 2013. I hope you get something out of this. Again, this is just supplemental to whatever you already use. Please don't make any definite trading decisions based only on this. But it does give a different perspective and helps you see things differently. It does for me anyway. And I hope it helps you out. Thanks a lot. Have a great week.